Hey, what's up, everybody? It's Joe Giunta here with Team Take Profits, here to help you trade and get paid. Tonight, in this video, we're going to have a really special opportunity for everybody in YouTube land. We're going to let you in on a private training session that I did with my team. This is for my team only. This is for people who have paid to have a membership to be a part of my Forex team. But tonight in this video, we're going to kind of open that up for everybody. We want to kind of let you see what goes on the inside. So just an opportunity for you. Come check it out. We'll see you on the video.
All right. So, guys, thank you again for being patient with me. That was kind of crazy. I don't know what was going on with my computer, but the whole thing is still acting funny. So I really hope I don't get like kicked off of here or something. But so yeah, so you know, if you're here tonight, man, thank you for being on the call. And I want to say, as I'm getting started too, that you know, I want to appreciate everybody being here over the last month or so, a little over a month. Some of you know we just bought a house and we've just been so busy. I tell you, when you don't know how hard it is to move until you move. Oh my goodness. I am just so done moving. So it's been a lot of work, a lot of stuff we've been you know, super busy with. But you know, Jay and I have been working on behind the scenes. So some of you guys have not seen me out front for the last month or so. But some of you I don't even know. I haven't even met yet. A couple of the names I've just been seeing in the chat. So you know, I just want to kind of give you a little bit of who I am before we get started in the training. But when you look at Trade and Get Paid, when you look at Kingdom Currency Traders, Team Take Profits, I'm one of the leaders of the team. You know, we've been building for about a year and a half now. Jay Wayne is like my right hand man. This guy is a beast. And so like we've been doing a lot of training. Paul Thomas is another one, this beast. And you know, so anyway, we've got a lot of cool things that are happening in the team. Jay Wayne and I have been working really hard behind the scenes. Jay, you're still unmuted, right?
Yeah.
Man, tell them about some of these long nights, man. Man, this guy was at my house a couple nights, well, I guess a week ago now. We were sitting here putting in work, doing some videos and stuff until about 6 in the morning, literally. I mean, we literally put in a good 12 or something hour shift doing videos and getting some stuff ready for you guys' trainings. And some of the things that Jay and I have been working on and that we're going to roll out to the team in the next week or two. It's going to be absolutely mind-boggling. You guys are going to just be so thrilled to see what we have coming. So please, you know, just stick with us for another week or two and watch and see in the next week or two what you see with training is particularly and with just some of the structured curriculum is going to just be absolutely awesome. So you know, I see Clint is on tonight too. I want to give a shout out to Clint. That guy is probably the best trader I've ever seen. Honestly, I get a little bit nervous when he's on here because I'm like, man, I gotta teach, and I got an 8-figure trader on here. He should be one teaching this class, not me. But Clint, thank you for being on, man. You're a beast, bro, and I appreciate your friendship. But anyway, tonight we're gonna do some strategy. All right. I told everybody in the Trade and Get Paid thread, I don't want to do a bunch of setup. I know we have some new people on tonight, and that's cool. If you need help with setup as far as getting things ready for, you know, your what do you call it? Your tradingview.com, tonight's really not for that. I want you to you know, get with your team leader. You can ask a lot of questions in the Trade and Get Paid group or in Discord, and we'll be able to help you with a lot of that kind of stuff there. So if this doesn't look familiar, that's fine. We'll get you there. But tonight I just want to focus on some strategy. Okay. I want to say this one more thing before I really actually get into the strategy itself. I've had several people that have messaged me in the last week or two that have just been saying, man, I'm frustrated, right? do me a favor. If you have been in here trading, or if you're new or whatever it might, maybe you're not so new, but if you have been frustrated at all, have you ever traded and been frustrated? Just type 1 in the chat for me. Just type something in the chat for me, because I know I'm not the only one that ever been frustrated trading. I know I can't be. So, all right. So I got a few people typing. Listen, I just want to encourage you. If you are frustrated with some of your trading at times, or let me ask you this: type 1. Have you ever felt like you're taking more losses than you are wins? You know. All right. So I got. Oh man, I got somebody who just hit the 1 and just pressed it and held it. Listen, this stuff is part of trading, especially in the beginning. Let me just say before anybody who told you when you came in here that you were never going to take a loss, they lied to you. Okay, you are going to take some losses sometimes. Clint is somebody who's been trading for several decades, I believe around 30 years. This guy is an 8-figure trader. He's an absolute beast when it comes to trading. And I guarantee you, if I ask Clint right now to get on the microphone and tell you if he ever loses a trade, there's no question that the answer is yes. He loses a trade from here and there. All right. I don't care who you are. If you're Christopher Terry, the CEO of IML, or if you're a brand new member of IML, you are going to take a loss from that. What we want to do is we want to minimize those losses. Let me get your mind right for a minute. A lot of people come in and they want to learn how to win, right? And that's good. Let's win. Let's get this money, all right? However, if you go and you win $10,000 in trades, but you don't know how to not lose, what's going to happen? You're just going to lose that $10,000 eventually. Everybody wants to know how to win. Everybody wants to know how to hit the big trade, right? But the important thing, before you learn how to hit the big trade, it's important to learn to not lose, right? We got to get our risk management proper. We got to get our mindset right. We got to get, we got to get to a point where we don't feel like we're missing out on a trade, that fear of missing out. Oh man, this could be the trade. Do I get in? Hey, Jay Wayne. Hey, Joe. Hey, Paul. What do I do? Is this it? Is that right now? Listen, stop that. This market has been going for a long time, and it ain't going to stop anytime soon. You ain't going to miss. If you miss a trade, there'll be another one, okay? If you miss out on a trade, that's all right. You're going to catch the next one. But don't feel like you got to go in here and chase the market. Don't feel like you got to come in here and hit a home run with everything that you do, right? Let me see. I got a message. Awesome. Yeah, thanks. I appreciate the message, Clint, and man, I appreciate you, bro, so much. And I'm definitely glad to be back and ready to start rocking too. But guys, we're gonna lose some trades every once in a while, but we have to learn how to minimize those losses, how to get our risk management proper, and how to make sure that we're not chasing the market. Listen, if the trade doesn't fit your certain parameters, don't take it. That's the bottom line. I can tell you I'm not going to get too deep into trade plan tonight, but I can tell you as part of my trade plan that I only take about 5 to 7 trades a week. Okay? And I'm not talking about my scalping sessions that we do with Clint or nothing like that. I'm talking about my own trades, day trading type trades, whether they be swing trades or day trades, intraday trades. I do 5 to 7 trades a week. I see some of you guys, and I'm just being real, I see some of you guys posting your screen like, hey, what do I do about this or whatever? And I'm seeing 7 or 8 trades open at one time. I'm seeing some of you guys with 20 trades open at one time. And I'm thinking, man, this is crazy. Some of y'all going to catch a margin call. Some of you, that to me that just shows the inexperience of trading, because I remember I did that in the beginning too. Guys, we only need a couple of trades. We don't need to over trade, right? I want you to remember this. If you're taking notes, remember this. It's not about winning your winning percentage. It's not about how much money you make. It's not about how many pips you catch. It's all about the return on investment. The only thing that matters, how much does my account grow at the end of the day, right? What if I catch 100 pips, but my account grows by 5%? So I'm like, cool, I made 5% on my account, but it felt good because it was 100 pips. But what if we catch 20 pips and my account grows by 10%? Right? What's better? You caught 100 pips or you caught 10%? Right? You could brag a lot about 100 pips, but 10% is paying the bills. Right? So at the end of the day, it's not about your pip count. It ain't about your winning percentage. Because let me throw that out for a second. Oh, I went 4-1. Oh, I won 10 trades in a row. But then on the 11th, because you weren't using proper risk management, you just lost all your winnings from the 10th. You know, I've seen people do that so many times. They get into these trades, they win 4 or 5 trades in a row, and then they say, well, man, I got it. I'm good to go, right? I'm all pumped up. And so now they feel like they're winning trades. They're winning trades now. So, hey, let's turn up our lot size. I think I got it. Man, I haven't lost a trade all day. Let's get it. 7 on black. Let's get it. And you get in there with that big lot size, and suddenly all the winnings you just had, you lost in one trade because you weren't using proper risk management. I want to encourage everybody. I'm not getting into this tonight. I just want to kind of throw this out there. I want to encourage everybody to get with one of our leaders. If you have not developed a trade plan that works for you, if you have not developed a strategy and a trade plan that works for you, I want you to get with one of our team leaders, Jay, Paul, myself, so get with somebody and let's develop your trade plan. Let's develop your structure, because without that, you're always going to be frustrated, guys. You're always going to be frustrated because I have to make money right now. I got another IML bill coming. Listen, man, don't stress about that. At the end of the day, $150 a month, you ain't gonna be thinking about $150 a year from now. I remember in the beginning, I was like, oh man, $150. A year and a half later, I ain't sweating that $150. That's nothing to me now, because I make that in a couple trades. Most of the time I make that in a trade. So I'm just telling you, I'm just being real with you guys. Don't stress about it. Don't think about the small peanuts. Let's think about the overall ROI. Let's think about the structure, right? Let's get your trade plan in place, and let's think of this thing long term. Don't think of this, where am I going to be next week? Let's think of this, where am I going to be next year? Where am I going to be in 5 years? Let's think of this long term, guys, because if you're looking at this trade by trade, every time you lose one, you're going to get discouraged. You're going to say, oh, I'm ready to quit. Don't do that. Think about it over a year's time. Think about it over some time, 6 months, and look back and say, I remember when I used to lose 3-4 in a row. And now you can be, 6 months from now, you might be saying, now all I do is win 3 or 4 in a row. Now I might lose 1 every 5, So think of it long term, guys. Let's get your trade plan in place. And, if you don't have that in place, I just encourage you to get with somebody to help you with that. Feel free, again, if you have, if you need help developing your risk management, or if you need help developing your trade plan, please get with one of our team leaders, and let's help you get that. All right. That's very important to me, and it really should be very important to you. Now, as far as now that I've given you the commercial, y'all like, man, I wish you'd shut up about that risk management stuff already. I want to catch some pips, right? That's what everybody's thinking. Let me teach you how to catch some pips, okay? Y'all see this now? Now we're looking at, we're just looking at a basic GA 4-hour chart, okay? Now, all trading is done, your standard trading is done on a 4-hour chart. Anything less than that is considered a short-term trade. Anything more than that is considered either a day trade, or some can even be a swing trade. Anything more than 8 hours is considered swing trading. So what I want you to know, and I've taught this to my team before, but I want it to be very, very clear, and Jay's gonna be like, oh, here we go with support and resistance. You see these numbers over here? They're not there for no reason. These numbers over here are so important. Before you can figure out how to do a bunch of all this fancy stuff with all these indicators and oh man, I could do the 30-minute crossover like Jay Wayne, thinking like it's the new Steph Curry move, right? I I could do the Bollinger Bands like Joe, you know, like the rope-a-dope, you know, like, nah, we don't, listen, don't think like that. Before me and Jay Wayne was doing Bollinger Bands and 30-minute crossovers and all this stuff, we was understanding what these candlesticks were doing, right? That's the main understanding first. We got to learn these candlesticks, right? So if you can't identify a trend, don't worry about Bollinger Bands. If you can't identify what a support and resistance line, a zone is, or a supply and demand zone, don't worry about Bollinger Bands. Don't worry about crossing over, doing all this kind of stuff. What I want to show you tonight is just some basic fundamentals, and then I'm going to give you a strategy to use, a simple strategy that you can make a lot of money with while you learn how to do all the fancy stuff, okay? Let me just tell you, these zones right here, the even numbers, is where I have it set up, 88, 87, 86, 85, 84. All right, these are called quarter points. In a thing called quarters theory, these are called quarter points, okay? These are price action, supply and demand zones. When we look at the overall market, okay, if I drop a line, I want to show you something that's really cool. I'm just going to do this kind of randomly, and then I'm just going to prove a point, and then I'm going to show you what it means, okay? So I just dropped 3 random lines. Let's pop these to some just let's pop these on some just even numbers. All right, so let's go. How about we go $1.85? Boom. Oh, I messed that boy all up. How about we go $1.85? All right. Now we're gonna go. Let's take this one. All right. Now let's take this one, and let's go. How about $1.83? And then let's take this one, and let's go. How about $1.87? How about let's do that. Now I did not drag and drop those, did I? I just put them on. All I did was put them on even numbers. Now I want you to look how important these zones are, though. Look back. Look back at these zones. Every one of them is in an indecision zone. Every one of them is in a place of support and resistance. Okay. So what I want you to know is, before we can figure out all the fancy stuff, watch this. Okay. So here we have a trend, and we have some zones here, right? So now, just common sense. If we know it went down, it went up. It went down, it went up. It went down, what's it going to do? It's going to go up. Now, we know that we have a line right here, and we know that we have a trend line over here. So what's the likelihood? I'm not telling you exactly what it's going to do, but let me ask you, is it kind of likely, you think? You think it could be kind of likely that it could go like that? Right? Why? Because down, up, down, up, down, up. Why? Because high, lower, low, lower high, lower low, lower high, lower low. So we should be forming another lower high. Real simple price action trading. Well, where can that lower high be? Well, I'll tell you, we have 2 places where I think it's going to go. We have a real nice level of resistance back here, which became support over here. And we have a trend line, and then we have this right here, this quarter point. So somewhere in the middle there, I'm not saying it's 100%, but I'm saying it's pretty highly likely that somewhere inside of that zone is where we're going to see the turnaround, right? Why? Because I didn't even use any indicators. All I did was find high, low, high, low, high, low. I'm looking for the next high, right? So because I understand price action, I understand that I have a zone right here. I have a trend line. So what do I call that? What happens when I have all of a sudden I have multiple things happening in one spot? That's called convergence. That means when you have multiple places coming together, a trend line, a quarter point, and a zone coming all together at once, price action is going to have a real hard time breaking through that. Now, I'm not saying it can't, but if it does, we're looking at a retest and a bounce up. So what I'm saying is that it's pretty likely that somewhere in this area, we're going to see this price come up to right here on GA, right? Now, again, I'm not telling you to jump in a buy. I'm telling you that we have a strong likelihood based on price action, right? So that's without doing anything. Now watch this. Excuse me. Let me show you a couple of really cool things here. Here, let me get rid of that one actually. All right, you see this line right here? Let me make it nice and fat so you can see it. All right. So this is a simple moving average. This is just a standard moving average, simple, and it comes as a 9 moving average. That's price is averaged on the close of each candle. So type 1 if you have ever used a moving average before. Okay, we've got a few people that has done some moving averages. Cool. Very good. Very good. Very good. All right. So here's what's going on here. We know when price action is above the moving average, what are we looking at? We're looking long, right? We're looking buy. When price action is below the moving average, we're looking sell, right? Yeah, we got a few more ones. Cool. So here's the deal. We have price action that kind of has been going down. It's on a downtrend, right? And look at each time it's gone up. It doesn't necessarily just stop on the moving average. It'll come through, come down, come through, come down, come through, come down. Probably going to come through, which is going to be right in our zone again. So price action told me what the moving average is telling me before I ever even had a moving average on. The thing about a simple moving average, guys, is that just to kind of explain a moving average and what it does, a moving average basically takes whatever that number is. You can make a moving average by going to the settings menu. You can make a moving average whatever number you want it to be. It could be a 100 moving average. It can be a 50 moving average. It could be a 10 moving average. Standard is a 9. Okay, so when you put it on there, standard moving average is a 9. What that means is that it is taking the price of the last 9 candles. Okay, the last 9 time frames. In this case, 4 hours. Each one of these candles represents 4 hours. So 4 hours, 8 hours, 12 hours, 16 hours, 20 hours, right? 6 candles in one day. So what we're seeing here on a 9 moving average is that it's taking the closing price of the previous 9 candles. Okay? The closing price of the previous 9 candles, including the current average of the one that you're in right now. And it takes that number, whatever that price is, okay? So the closing price of this candle was $1.8116. The price of this one, 1.81824. 1.82089. It takes all those numbers, the last 9, adds them up and divides them by 9, which gives you the average of 1.81713. And that point, wherever that moving average is at right now as it is the average of the close of the last 9 candles. So when a time period closes, it registers that price, divides it by 9 after adding it all total up, and it gives you the average of that time period. So over the last 9 candles, which are 4-hour candles, what's 9 times 4, guys? Right? 9, 18, 27, 36. So the last 36 hours, the average price of GA is 1.81691. So 713 really is where it was. The average price of GA over the last 36 hours is right there, okay? Because it was up here, now it's down here, and there's the average. So you're always going to find the average generally right in the middle of where the last 9 or whatever your period is 50, 100, 10, in this case 9. I want to show you something else. Now this is the same thing, right? Let me make it a different color. Okay. I'll make this one nice and fat for you too. So this one is basically the same thing. The same principle, except that this is called an exponential moving average. And on an exponential moving average, rather than having the price of the last 9 candles averaged out, here's what the exponential moving average does. It still takes the closing price of the last 9 candles and puts them all together, adds them up, and divides them. However, there is a formula built into the determination of the moving average that puts more emphasis on the last 30%, 30 to 40% of price action. So there, in other words, it takes the nine candles, sure, but in the exponential's case, it puts the more emphasis on the last 3 or 4 candles. Okay. Why does it do that? Well, because with a simple moving average, you're susceptible to spikes, because when you have a sudden movement like that, where you're going up and then suddenly you're going down, you can generally have a sharp spike. Whereas an exponential is going to stick close to the price action the whole time, because more emphasis is on what have you done for me lately, right? I want to know what happened way back here because it's important, but it's more important for me to know what's going on right now, right? And so let's see what that looks like together. Notice how they're running really close together. Both of them are 9 moving averages. Both of them are the averages. Look here. See this? This is interesting, right? Both of them end up basically in the same place, with the red being just a hair lower. Why? Because we've been in a downtrend. Both of them are the average of the 9, except the EMA, or the red one, puts more emphasis on that average of the last 3 to 4 candles. And because we had that sharp down move right here, that's why the red is a hair lower than the blue. And notice how when we go here, watch what happens here. I'm going to show you something. Notice how the blue, the simple, it goes up, 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 up. We have this sharp move down, but the blue is still kind of going up because it's averaging all of this past information, which was all green, all bullish information. And it still has the average of that big old candle in there, and this, all this bullish movement. And so the blue is still kind of going up. Whereas as soon as that sharp move down happens right here, the exponential says, yeah, fine. I'm glad that we got the information from all back here, but look what's happening right now, right? And so because we have this sharp move down, the exponential says, I want to take what these last few candles have done, and I want that to be my, where my average comes from. And notice how the red doesn't allow itself to keep going up. It goes down with the candles and stays very close. You see that? And then as it goes down, look, it starts to shoot back up, and look, the blue is still trying to go down. Oh, wait. It's going up, it's going up, it's going up. Whereas the red's like, wait a minute, wait, don't leave without me. The exponential puts more emphasis on the most recent price and the most recent action of the candles, whereas the simple takes the overall and just gives you a flat average. I hope that makes sense. Now, what does that mean? What does that mean? Okay, well, here's what you can do with it. When you have a simple moving average and you have a exponential moving average, let's spread this out a little bit. Make sure you can see it real good. I want you to see something. The blue kind of becomes the constant, right? It's that steady line that I'm not going to be affected too much, because I just want a flat rate. I just want a flat price for all the previous 9 candles. The exponential says, I want to move with the candles. Wherever the candles are going, that's where I want to go. So here's what happens. on a 4-hour strategy, watch this. See how the exponential crosses over the bottom of the simple? See how the exponential crosses over and goes underneath? The exponential is going to actually stick with what's going on, not the overall trend, because remember, the overall trend is bearish, right? But with the overall trend, that's fine and good. But what's going on right now, not what's going on overall, what's going on right now, the exponential goes down. Notice that every time, if you go back, notice that every time these candles go red and this market goes bearish, that red line drops up underneath the blue line, because the most recent information says sell, whereas the blue is still trying to catch up. Okay, every time you see it cross over to the upside, you start to see bullish movement. So here is a really, really easy and simple way to do this. And then I'm going to make it even more. I'm going to make it where it's almost foolproof for you. You see the crossover. The exponential crosses over the simple. You sell. At the crossover, you sell. So guys, let me mark this right here. Right there. See that little wick to the upside? It came down, right? So let me move this for just a second. See how that candle came down, but it didn't cross until the next candle, right? See that? Even though this candle was below below the moving average, it didn't actually cross over till the next one. Why? Because we had to have that retest. That wick right here on the top of this little candle had to come back and retest, and when it did and kept going down, that was proof that this was going to go into a bearish move. So what happens? The price crosses over and we go into a bearish move. So right on that candle, you press sell. And you say, well, how do I know when to get out? Well, there's a couple of things you can do. The easiest thing to do, now you may not get every single pip, which is back why I started this training with this information. Learn how to not lose a trade before you learn how to catch every little pip. When it crosses back over to the upside, you get out. It's just that simple. Guys, this is about the most simple strategy you could ever learn in the Forex market. You get in at the crossover, you get out when it crosses back. So you say, what does that mean? Well, I'll tell you. Just on this little baby move right here, you got in when it crossed, you came all the way down, and you waited. Now you don't even have to have it. Now, if you have more skill, you could have got out here. Why? Because remember that price action point I told you about? If you had more skill, you could say, well, it's going to keep dropping, and guess what? It's going to run right into my 180 line, or my 181 line, right? And you could say, well, because I know that's a supply and demand zone, and because I see a big wick, I'm getting out right here. And you could have caught 149 pips. What? That little bit, and I caught 149 pips? Yeah, if you were more skilled, you could get in and see that thing right to my supply zone and my demand zone. Or you could say, I'm going to take the simple route, and I'm going to take it all the way until this thing crosses back over. Now, I understand that, yeah, in this particular case, you wouldn't have caught as many pips. But guess what, guys? From crossover to crossover, that's an 80 pip trade. How many of you like to catch some 80 pips on a trade? How many of you would like to be catching 80 pips on your trades? Little baby trades like that. Guys, this stuff is easy. This is easy money. Easy buckets here, guys. All right. I'm trying to tell you something right now. If you can just do this. Now, let me just be clear. This is not like the way I trade on a norm. Okay? This is not how I generally trade on a norm. But for those of you who are saying, I need to catch some more money, I need to make some more money, I need to, this is too hard for me, I'm having a too hard learning all these strategies. And listen, this is easy buckets right here, man. Wait for the exponential to cross, wait for the exponential to cross, get in, get out. Done. 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 This is like, you can't lose. This is like easy. This is like somebody giving you free money. Right? This is easy stuff. Let's test it. Let's go back. Let's go all right, let's check this one out. Right? You go here. Put my little rectangle. See, it comes in, boom, crosses over. Guess what happens when it crosses over? Remember we talked about that wick? Look, same thing happened, but this time bullish instead of bearish. Look what happened here. Green candle went up and crossed over price action, but it wasn't enough. So what happened? It had to retest, got the big wick, came back, exponential crossed over. I'm in. Uh-oh, man. Oh no, I'm losing. Well, let's where do you set your stop loss? You set it just let me turn that red. Where do you set your stop loss? You set it right below the previous low, right? Boom, there you go. Here's your stop loss. You get in. Uh-oh, oh no, it's gonna stop out on me. No, it ain't. Chill out. Why? Because it didn't cross back over yet. Up, 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 up. Now I could get out right here. Why? Because I know my supply and demand zones right there, right? Now, if you're more skilled, you'll understand these zones and why they're important. I could have rode this boy from right here to right here, and I could have caught me a cool 200 pips. I could have caught me a cool 200 pips. Set it and forget it. Set it and forget it. Walk away. This ain't no 5-minute trade. This is hours. This is over a whole day. You're going to pay a swap fee on this. 200 pips. Or I can say I'm going to take the easy way out and ride it back to the crossover and still catch 108 pips. It crossed over, went all the way up, touched my supply zone, came back, crossed over. I'm out. If you're really skilled, it crosses over, it goes to my supply zone, touches, I'm out. 200 pips. Dude, this stuff is simple. Wait for the crossover. Watch your supply and demand zones. Watch those quarter points. If it hits it, get out. If it don't, wait to the crossover. Done. Done. Man, is this over and over again? Well, let's check it out. Let's make this a little smaller for you. Some of y'all 200 pips, maybe that's not enough. Watch this. See all this movement right here? This is sideways. Remember, the first rule of trading is that we don't. Oh, my bad. Hold on. What did I do here? The first rule of trading, right? When in IML Academy, remember when she said, "I am a student always." What was the first thing she told you? The trend is your. Somebody type it. The trend is your what? Somebody got to be watching IML TV up in here. IML Academy up in here. The trend is my man, Lee, Grace. Y'all know what I'm talking about. This is easy stuff here. The trend is your friend. So why it crossed over? Well, why ain't I getting in? Because, man, this is a bunch of sideways mumbo jumbo. I don't want all that. I want a trend to form first. I don't want to trade against the trend, right? So what do we do? What do we do? We wait for that boy to start forming. All right, cool. We got some clear distance. Easy buckets. Right there. We're in. Okay. We get in, and it goes, and it hits my supply zone. Now let's just keep it real simple. All right. You get into the crossover, and you ride into the supply zone. Just that alone, 133 pips. Or we could say, man, it ain't crossed over yet. 243 pips, your next zone. Or Ain't crossed over yet. Wait a minute. You telling me I could catch 440 pips? Right? Or you can say maybe I'll get out right here because it kind of crossed right here. 325 pips. So let's just call it right there. Let's just call it right there. That stuff is easy. All you had to do is wait for it to cross and then cross back again. Right? 325 pips. Guys, this stuff is super easy. Let's go back. I'll show you one more. Let's go to this one right here. This is a nice one. Crosses over, right? Here's the crossover. Boom.
Hey, Joe, I got a question.
Yeah, hang on 1 second for me, all right, bud? We got a crossover right here. Let me just show this one, and I'll answer all your questions. And here's the next crossover. All right. So let's look at this one. Crosses over. Now I don't have my line there, right? But this is easy stuff. Boom. Back to the crossover. 113 pips. Crossover to crossover, 113 pips. If you can learn how to do that, just watch the exponential cross the simple. You're gonna make quite you can hit these trades over and over and over and over again. And if you're not skilled enough to, which is fine, no, I don't expect the new people to be super skilled yet. But in like this kind of movement right here, you say, man, I don't know, it's crossing. Wait a minute, it's not. Well, is this a trend? Or is that a range? Don't trade the range, trade the trend. Right? Wait for the trend to form, hit it. Wait, look at the overall chart first. Watch this. Look at the overall chart first. Don't trade the sideways stuff. Trade the trend. Once you establish the trend, remember before we had this and all this other kind of stuff, right? Before we had all them crazy lines, all we had was candlesticks and price points. That's all we had. We identified where we were based on that. Then we came in and said, how can I make some money? Everybody with me? Who was it that had a question?
It was me. I was kind of wondering, how do you know when you have that 100 pip gain or so over a course of a day, how do you know when to get out of it? When to predict? Do you need to be sitting there watching it, or where would you know where to set your take profits at? Is what I'm asking pretty much.
Sure. No, that's a good question. What's your name?
Jonathan.
Jonathan. All right, cool, man. Good question, Jonathan. So what you would want to do, number one, the exit point is when we have the exponential cross back over, right? So I think that we understand that.
Yeah, we got
how we set the take profits on that. So we go to the previous low to set our stop loss, and then for our take profit, we look for these numbers right here, right? These next zones, and we look at our support and resistance. Now, I don't want to get too much like deep into like Fibonacci retracement and all that kind of stuff, but which honestly everybody should learn Fibonacci retracements, and how to use that tool. But man, I messed up. Dropped it on the screen.
Learning that on Wednesdays.
Good. So yeah, you should learn that, and that's good. We're learning that on Wednesday, all right? But how we're setting the take profit is we'll find these zones. So let's say, for an example, in this one right here, we crossed over to the upside, right? Remember we looked at this one. It looked like it might have stopped out, but we set our stop loss to the previous low, so it didn't stop out. Kept going up. How do we know? Well, we knew that we had a 187 coming, right? And if we look left, now I imagine, let's see. Well, it's been a long time since it's been that high anyway. So what we do is we look left and we find these zones, these even numbers, 187, 186, like that. And even some of them, 187.5, 187.25, those are all quarter points, majors and minors. And so what we would do is we would find this 187 if you were looking to do price point trading instead of the crossover, you would look to 187, and then you would set your take profit just inside it. Let's say at 186,750. So let's say if you was to drop that right there, right? Let's say you double click that, and we call it 186.75, right? And let's make that blue for the take profit. So you would set your stop loss right below the previous low, and you would set your take profit just inside of where you think it could go as far as that. Here's another thing you can do is, number one, you don't have to sit and watch it, but what you want to do is you want to have this stop loss moving with your price action. So as you're watching it, let me spread that out again. So as you're watching this, right? So you don't have to sit and watch it all day long, but remember, this is you're in here. So 4, 8, 12, 16, 20, 24, 28, 32, 36, 40. I mean, you're talking about 40 hours in this trade, right? So if you're looking at it, let's say, 2 or 3 times a day, I don't mean you got to sit and stare at a chart, but you pull out your phone and you look at it and you see, okay, I'm moving up. So now, you're talking 4, 8, 12, 16, 20. 1 day later, you're here, right? Well, you don't want your stop loss still sitting down here. You can move that stop loss up into here, So now, let's say if you're sleeping and that boy turns around, worst case scenario, you caught 25 pips. If it stops out, right? Or probably 30 pips is really what you really caught. You trail that stop loss along with it. You look at it 4 or 5 hours later and it's up here. You trail that stop loss and you move it up and protect that downside, right? So that's one way to secure profit. The other way to do it is you can set alerts. If you know that your price is going to 187, and let's say you decide, okay, at 186, let's just say 186, I want to set an alert. Well, you can put that on there, add an alert, and it'll literally send you a text and let you know when it gets to that, or send you an email to a text. It'll literally let you know when price hits that. So now it's not, you're not even having to sit here and watch it. You just create an alert, halfway to what you think it's going to go, and you get a text or you get an email that says, hey, price just hit. TradingView just sent you an email or an alert. I mean, now you can go, okay, price just hit, boom. And you just trail that stop. So you don't have to sit there and look at it, I guess is what I'm trying to get at. You can set alerts along the way, trail your stop, and use your price points, your quarter points as exit points. If along the way, here's the other thing. As you see it was going up, look what's happening here. Look at this is a lot of information in here that's very important. See that black space in between these lines, Jonathan?
Yes.
Notice how it keeps getting bigger. The more that it goes bullish, the bigger it gets. You see that?
Yeah.
As that boy keeps getting bigger, that's good. That's more money. As it starts to get closer, it's because the exponential is getting closer to that simple line to make that crossover again. If you get here and you start to see it, wait a minute, it's not going the same direction anymore. It's not pointing straight up anymore. Now suddenly it's pointing over to the right. It looks like it might try to cross over. Get out. Don't be greedy. Take it and run. Here's where that happened, at this green line. Really at the end of this red candle. That's 180 pips, 185 pips. And all you had to see was that line start to curve and you got out. Right? So you set your initial take profit like that, your initial stop loss, but you manipulate them as the market moves. And you don't have to sit there and watch it happen. You can set price alerts to let you know when to look. If you wanted to really look at it, set one here, set one here, set one here. Do what you got to do. And all it's going to do is send you a text. It's not like you're going to have to interrupt your day. It's just going to send you a text and tell you price just crossed. And then you can look at your phone real quick. Cool. Nice. Move your stop loss. Does that make sense?
It makes perfect sense.
Awesome.
You only entering on the 4 hour, ain't you?
I'm sorry?
I said you only entering on the 4 hour, ain't you?
Now I'm entering this particular setup. I was doing on a 4 hour, but it works for anything.
Okay.
Right? So it works for any. Let me go back to here real quick before I make a change. So I'm gonna show you one more thing about this that's gonna kind of make this a little bit more palatable for no matter who you are. Let's say you go down to the 30-minute. Same thing. Right?
Okay.
Same thing on the 30-minute. Now it ain't 200 pips anymore, you know.
Okay.
But look, watch this. Let's take this out of here. Oop. Crosses over right here, right on 30-minute.
Mm-hmm.
Remember all the principles I just talked about before? They all still remain. Oh, man, this thing is giving me trouble tonight, guys. All the principles. We got the crossover. We got the wick. We got the big move. Tries to go up, wicks out, right? Here we go. We get in. It rides alongside of it. Now, we mind you, we're on a 30-minute, so I'm not looking for massive spread. The thing ain't going to be out here. Rides along the inside, crosses back over. So what do I do? What happened? I caught all the way down to here where it came down, 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 right? Right to that 181 area. Came all the way back up, and it was on this green candle that it crossed back over, right? 139 pips on a 30-minute chart. A 30-minute chart. Guys, this is easy stuff. 30 minutes. Let's do this. Go to the 5-minute. I don't recommend this just because you're not going to walk away from it, you know. But the principle still remains the same. Red crosses over the top, bullish. End of story. Right now, look at this. GA 5-minute. We're looking at this active right now. Look what's happening, guys. This is an active chart right now. You're watching it happen before your eyes. Look what's happening. You should be in this scalp right now. No, that's fine. I'm just playing. Don't do it. I'm just saying, though. Look what's happening right before your eyes.
Man.
This is not me doing this. I'm not manipulating these charts. I'm showing you what's happening. Watch. Uh-oh, we got a wick. Uh-oh, we got a wick. Next candle is going to show us whether it's going to cross over or not. Uh-oh, we got a wick. So if we were on a 5-minute, we'd have been done anyway. You know what's funny? Watch this. You want to see something really cool? 182. 182. Where did it wick out at? 182. Crossed over, went to my 182 line, started gassing out. This stuff is like clockwork. Crossed over, went up, retested, just a little trend. Boom, boom, boom. Went up, gassing out on the 182 line. And just to make it 100% true, because that's 181.998. 182. Gassing out on the 182 line. Oh, it's finding steam again. It's finding steam. Let's see what happens. Right? This candle, which has got 3 minutes left in it, so I don't think we're gonna sit here and watch it for 3 minutes. But this candle, when the next one starts, it's gonna determine whether this crosses or whether it stays on the other side and keeps riding up. Just on a 5-minute chart right now, if we would have got in this trade just 25-30 minutes ago, we'd be up 72 pips right now on a 5-minute chart. Is that ridiculous?
Yes.
72 pips on a 5-minute chart? There ain't no scalping like that.
That's where I make my income from, bro. I be on that 15, 30-minute chart all day long, every day.
All day. Yeah, that's scalping, baby. So guys, I'm just saying this stuff works no matter what your strategy, no matter if you like to be a long-term trader or a scalper. I showed you on a 4-hour chart just because I wanted to show you that it's not just some scalping, strategy that you have to have the ins and nah. This works no matter what you do, no matter what chart you're on, right? Yeah, there you go. How much time do you have to enter the trade before the market moves? That depends on what chart you're on, but you generally want to be in it on on the what do you call the crossover is when you want to get in, right? Look, we're starting to gas out again. So I guess what I'm saying is you have to just look back at your price action, right? If you're looking at it and you got a line right here, and you got another line right here, right? On a 5-minute chart. So why? Because when we look back, let's look left. See those lines? Boom, there's a line. This stuff is over and over again. So we know on a 5-minute chart that this is a zone. Right here. We know that's a zone on a 5-minute chart just because all we got to do is look left. So if we're back here, if I were to use the replay function and we went back here, right, and you couldn't see none of this, we watch it go up. We see it start gassing out right here on this wick. It bounced back to the bottom of my little zone. It starts playing around. It's trying to find that break. It comes down. It comes back up. I get that crossover. And now I know when I got that crossover, it's time. Boom, I get in. And I knew it was going to happen there because I was looking left, right? I looked back in the zone. Notice where the crossover happened. Look, right at the bottom of my zone. It played around. It broke it. It broke back in. Retested. Done. Gone. Always wait for the retest. Up. Retest. Gone. A, B, C, D. Every single time. A, B, C, D. Whether that's a 1-minute chart, whether that's a weekly chart. A, B, C, D every time. 8 seconds. 8 seconds. 5, 4, 3. Right. Boom. There's a new. It didn't cross over. We stay in. We stay in. Uh-oh. Look what the candle's doing. Look at this, guys. Right? This is a no-brainer. And it doesn't matter what kind of chart you're on. Watch this. Look right here. Back to the 4-hour. What's going on here? We got a cross. We got a cross. We got a nice engulfing candle. We got a cross. Boom. Right? What's happening? I got that cross. And remember what I said in the very, very beginning of this? Some of y'all should be getting into something right now. Remember what I said at the beginning of this? Going back to the very first thing I showed you. High, low, lower high, lower low, lower high, lower low, and I have to get back to get my lower high again if this is going to continue to be a downtrend. Well, what's got to happen in order for that to happen? Well, I've got to have a crossover. Guess what? We just got it. There's your crossover. So I'm telling you, you got probably, I would say, just to be safe, we got about 90 pips coming on GA. Guys, take it for what you want it to be. That's what we got coming. I'm telling you, this stuff is a no-brainer. I'm going to show you one last thing. All right, let's get rid of these. All I have is price action. All I have is trends, all that stuff. Now, this one is a 9 and a 21, both simple. This is a way to have an even bigger swing, because now check this out. You have the red one, which is measuring nine candles. It's a 9 simple moving average. Then you have the green one, which is a 21 simple moving average. Right? Yeah, I told you guys. This is money. Now you have the 9 and you have the 21. All right. Another way you can do this, the same exact way. The 9 crossed up. Wait for it to come back to the 21. Every single time. 9 and 21. 9 and 21. 9 and 21. Every single time. Watch this. Crosses over. Comes up. Out. Crosses over. Up. Out. Crosses over. Down. This one, you say, well, wait a minute. Should I get out? Well, no, not yet, because it didn't cross over. Boom, you got more movement. So you took some drawdown in this one, but it ended up getting some really nice pips out of it. All right. Crossed over. Up, 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 out. Crossed over. Up, 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 out. Crossed back over. So remember, you're out on one as you're in on the next. In, out. But now in, out. But now in, out. But now in, out. But now in, out, right? This is like, this could literally be everything you need. Everybody with me? Look at this money happening right here. Look at that candle. That candle.
It's 100 pips, bro, right here at this point. That's crazy.
Jay Wayne, you with me, bro?
I think I'm gonna start my London.
I'm in on this trade right now.
But so, yeah, Nick said he ain't lying about that money. Listen, guys, this is what I've been doing. This is how I walked away from a job. This is how I bought a house. This is how, I mean, God has been good, man. God is good. But you know, Forex, this kind of stuff. Now, this is not the only way I trade. Most of you know me, you know I trade a lot of gold, which that's a whole nother animal. Okay. Jonathan said he's in, he ain't wasting no time. So those of you who know me, you know I like to trade gold. So I like to, you know, that's what I do. But GA is where it all started for me. Jay Wayne been with me a while. He knows GA is what I do, right? And gold is what I do. So I hope this helps. Does anybody else have any other quick questions? I know it's already late out, and I apologize. I was late getting on. So again, forgive me for that. And I appreciate everybody's patience, but I hope this was worth your wait. Jay, you got anything you want to add, bro?
Nah. Well, yeah, like on GA right now, like if you're a higher time trader, then you could probably take it. But if you like a scalper or anything, like on the 1530, like you don't want to be getting in right now because it's like you chasing the market. You want to wait for a pullback. No pullback, no entry.
Right, and you know Jay said it perfectly right. No pullback, no entry. So and remind you, let's go back to that 5, right? Real quick, just to kind of show you something what he's talking about. Right? What was it, the 5 we were looking at?
Yeah.
Oh, but that was on the other moving average. Hold on. Right? So when we talked about that entry on the 5, I think it was on this. I don't remember. I think it was on this candle here. But yeah, it was this candle here. We came up. We don't want to get in on a midway through a scalp, right? But look how it's starting to be red. If this thing pulls back real nice, let me drop a line. Watch this. Remember those marks that we talked about? Those even numbers that are so important? $1.82. If this thing pulls back to the $1.82 mark but doesn't cross over, that's your re-entry point. You with me, Jay? You agree with that?
Yeah. Oh yeah. I'm
If
looking
this
at
thing
it.
pulls back to 182, right? So let me just make it real plain for you. I'm not saying it's gonna do this. I'm just saying if it does, if this thing pulls back to 182, right? And at the same time, this does not cross over, it still remains going up,
Right.
which means you had bearish movement, but my moving average kept going up on the right side. It didn't have another crossover. Then what you'd be looking for is this. Okay, you with me?
Yeah.
Now, if it pulls back to that 182 mark and this crosses over, don't try to get re-entry up because it's going to go down, right? Until the next crossover. Crossover, out. Well, crossover in, crossover out. Crossover in, crossover out. Crossover in, crossover out. This is easy stuff, guys. Don't try to overdo it. Don't overcomplicate it. Okay? Now here's the next crazy thing, and this is what I'm going to be done with. This is my last thing. For those of you, I think everybody in here is in IML. If you're not, you're missing out. Because what you could be doing, you say, well, man, how do I know? How do I know? You can use the web analyzer, set this up on your web analyzer, and your web analyzer will alert you when the crossover happens. I mean, just stop. This is getting too easy. You can set this on your web analyzer, and you can literally get alerted when the crossover happens. So you can sit here and scalp. Oh, crossover, boom. All right, crossover, boom. And you can just sit here and watch one after another. You can set this boy down to the 1 minute. Now, I wouldn't do this because this is just crazy. But look at this on the 1 minute chart. Some of y'all like 1 minute. Remember that zone we highlighted earlier on the 4-hour chart? Look, that boy rode in that zone. Broke out of the zone with a crossover. Look at that, guys. It broke out of our zone with a crossover. And it did not come back yet on a 1 minute chart. Just stop. Just stop. Not quit yet. On a 1 minute chart, 20 minutes, 25 minutes, whatever how many candles that is. 87 pips on a 1 minute chart. I rest my case. That's it. Now, I'm not telling you to go trade the 1 minute chart. But what I'm telling you is that this is a no-brainer. This is easy money right here. All right, guys. So with that, I just want to thank you guys for being on. I hope this has been helpful to you. My regular training will, you know, I've not done a training now for about a month, maybe even a little bit more than that. So I haven't been on. I appreciate you guys just kind of being patient with me while I got some things in order with my new home. But the new, you know, the new training schedule for me is every Thursday night. Here, what a blessing too, guys. We have 4 trainings. I'm not the only one. You guys already know Jay Wayne brings it every week. Matt McCormick brings it, right? We have training Monday, Tuesday, Wednesday, and Thursday. So no matter what your schedule is, we got something for you. No matter, I encourage you to be on every night, man. Let's get it. But what I'm saying is that I realize everybody can't do everything. But if you work on Mondays, be on Tuesday. I go to church on Tuesday, so I can't do Tuesdays, but I could be on Wednesday, right? So no matter what you do, Monday, Tuesday, Wednesday, Thursday, we have training for you. If this was beneficial to you tonight, Monday, Tuesday, Wednesday, Thursday, we have training for you. Anybody in here, put a 1 if you've been in one of Jay Wayne's trainings. We already know those trainings are unbelievable. Jay Wayne been blessing the team for a year now. If you ain't been on Jay Wayne's trainings, man, you missing out. The next thing is you need to go check out the YouTube channels. Me and Jay both have YouTube channels. You need to go check them out, subscribe to them, put the bell, click the little bell on it, because we're always dropping more content that's going to help you, right? We want this team to win. So we work hard in the background to make some things happen for you, and then in the next couple of weeks, be on the lookout. Look at this 1 minute chart, guys. While I'm sitting here talking, look what's happening. We're coming to the close. We're coming to the close. Look at that. This is on a 1 minute chart. In a half hour, if you was at $1 a pip, you'd have made about $100 and $80 something in a half hour. Anybody here make $160 an hour? No? Okay.
Now we ain't making no $160 an hour.
Right. I'm just saying.
Right.
Forex, baby. Forex.
In Forex. Only.
Guys, I hope this has been a blessing again. Thank you guys for being on. Be on these trainings with us. If you've been having some frustration lately with IML, with trading, and I know there's that's the other thing too. I'm sorry to keep rambling, but I ain't been on it. Y'all gotta give me some liberty, man. I ain't been on it a month. I got a lot to say. But you know what too? Our website just changed over. There's been a lot of transition with IML. We've been doing a lot of changing over into the new website, launching new tools, Gold Cup, and Pip Talk, awesome stuff. So a lot of people have been a little lost over the last month. The transition happening, you can't get help on the website. You can't get help because I've been off. Jay Wayne been trying to help everybody, but he's only one man. I get it, guys, and I realize the last month or so has been a little frustrating. Thank you for sticking it out with us, But trust me, you're all good. You're in the right hands. IML is going places. The stuff we're dropping is hot, and the training we're doing is good. If you stick with it, you will be prosperous with it. You're with the right people. You're with the right trainers. You're with the right company. Don't give up. If you have given up, if you let your stuff go inactive or something, I get it. I get it that you was frustrated, but now's not the time to quit. Now's the time to get back. All right. So, all right, guys. Appreciate you guys. Love the team. Jay Wayne, you the man, bro. Paul Thomas, you the man. I love you guys, and we're gonna close this thing out. I'll catch you next time.